Good morning. Up and away. Again, gapping up to new all-time highs. I put the hysterical laughing face on the intro slide because we all have to be giddy. Things are so bullish and continuing to go up. And so NVIDIA driving things up. And, yesterday had the schizophrenic moment on the Fed FOMC minutes that market sold off, looked pretty scary on a 4-minute, 5-minute chart or something smaller, but we talked in the green room in retrospect of the daily chart and the hourly chart, it really wasn't a big deal. But things are a big deal to the time frame that you're trading on. The closer you get to the action, the more impressive it would be. Yeah, so it bottomed out. And it did exactly what I explained at the time when we were discussing from the point of view of a smaller time frame what had to happen. Meaning it had to go down, it came down, came down hard, it had to pivot, it has to retest. Basically, it had to build new support, a correction through time to shake off, what had occurred. You get away from the previous decline as big as it is. And, so that sideways price action begins to build support. And, we see, NVIDIA came out and saved the day. Who gives a darn about the Fed and what they're worried about? Blah, blah, blah. And so markets are off to the races again and pushing up. And so we had this, looking at the futures here, we had this corrective price action here. And so when we get that, it's unknown. Does that corrective price action result in possibly an M top? Is that resting period result in the next move higher, which now we see it is, and we'll see how far that goes. In light of our internals, which gave us a heads up, and as I said, they're rarely, if ever, pinpoint accurate. That doesn't mean we're ignoring this. Equity put call ratio, and it hasn't hit the upper band in a long time, but certainly this may result in that happening as of tomorrow. And we're going into the holiday weekend and the end of the month, and rarely does the market sell off. I mean, there's a less likelihood of the market selling off in a big way at the end of the month, the beginning of a new month, and pretty much around a holiday too. Just the way things tend to be, maybe lighter volume, but then there's inflows of money coming in, just the automatic inflows, dollar cost averaging. Breadth has deteriorated a bit, but that isn't unusual when you get a sideways consolidation. And one of our rules of thumb is that when breadth in an uptrend, when breadth comes down to the area of the zero line, that's typically where a trend will resume. Now, we don't know about how much. So those rules of thumb are guidelines as to our thought process. And then we see what happens. And then, it's rules of thumb like that are things that we observe from our history doing this. And then we see, does that happen again? So if it happens more times than it doesn't, it becomes a good rule. Yesterday was a corrective day. On that announcement, you can see the down breath at the end of the day there. So we'll see where we go from here. Right now, things look like they're going to go higher. We had this resting period. Another rule, a part of our thought processes, after resting periods and prices break out, they should not come down deeply into the breakout bar. You remember back here, right, and more evident on the S&Ps, we talked about breakout bar failures. I don't know if this will happen, but the internals are lined up where there's that possibility. We shall see. But when you get, and we had a little discussion of that in the green room yesterday, when you get 2-3 days of sideways consolidation within an uptrend and prices break out, where you get a bit of a range expansion bar, if you get an inside day after that and it breaks the low, historically, it's a heads up to take your money off the table. It isn't a reason to short. Okay? So we always have our patterns, and then we see what happens in the moment. So it was the blast off, the end of the day. Here's a little pullback, little buy setup, moving up again, and there's nothing up above to trade against. I guess if you got some fib extensions or magic lines, there's something up there. And but we'll see. Right now, there's new all-time highs. There's nothing up there. A little bit of a back off here, I guess, on that economic data. No big deal as of yet. So we assume prices will continue to move up. Bring your stop under the consolidation. Now, I'm not saying you're trading this on a daily basis, but just as a general rule, this is how we raise stops. After a consolidation and a continuation support, you bring your stop up. If you were trading on a smaller time frame, you would then bring your stop under there. All right, let's take a look around. Alex in our room here is sharing in the room here. He says all 5 internals that he watches are in a sell area. There you go. So I used to look at many, many things. 5 things? No. I mean, when I was really into, reviewing market internals, and used to look at things like, bull versus bears, AII, newsletter writers, are they bullish, bearish? So many different things. And so over the years, always focused on simplification, just came down to breadth and sentiment. If they're aligned together, risk is rising, with the understanding it's never going to be pinpoint accurate, but it's pretty damn accurate when it puts you over the decades that I've used it as to, I'm in the area. Now I need a pattern. We don't have a pattern yet. And so what we do have happening here, what happened here is, see, this is what we call correction bars. And there's a little correction. These bars that dip under prior bars and recover are correction bars, and they signal a continuation of the trend. And they give you reference points that say, hey, that's your correction bar. There was confirmation of the correction bar by trading above the highs. It doesn't have to be 52-week highs. And now you raise your stop under the correction bar. So we'll see where today ends. Does it close like this? Does it go higher? Is it a topping tail? That's the unknown. We've got a little void down below. We've got minor support. You've got that major support, the low prior to the higher high. And again, so what we see right now, I've talked about this, in the green room and probably here too at times, strong momentum. This suggests momentum is going to continue. It pulled back. So strong momentum. Be a buyer on a pullback. Now it makes a new high. This momentum compared to that momentum move is smaller. This signals slowing momentum after the red bar. The red bar is not done. I don't know how much time is left in here on this bar. I could put it in, but I'm not going to do it right now. So upside momentum is slowing. That doesn't mean it can't pick up again. It just means it's slowing. So it's getting a little tired in the moment. But if it can trade within here or go sideways, that would be supportive of its ability to go higher. We shall see. Common sense says if it comes all the way down here within this time frame, something is not as bullish as it appears to be or appeared to be. And if it comes all the way back down there, we'll see how that develops. Someone's asking Greg a question, please. a plus 180 is a 100% or more retracement. Do you buy next day over the high according to lower time frame, making a pullback to a higher or a sideways consolidation, or buy on a 5-minute? Okay, so you're asking me about multiple time frames. And because if I say a 180, I'm assuming on your question, you're suggesting a higher time frame because you're asking me about entries on smaller time frames. So two things. See, 180s or bottoming tail bars or whatever the pattern may be, that is one concept. You cannot trade anything on one concept. And the whole idea about MTS, Master Trader Technical Strategies, is the combination of concepts coming together at a time. So a 180 pattern in an up, and the initial move from an uptrend getting a 180 pattern would say to buy. Now, if you want to go down to a 5-minute because your higher time frame gave you a bias to buy, that's fine. So you're trading intraday. That doesn't mean you're going to get that buy setup on the 5-minute. The alternative is if you get that bullish 180 under the right circumstances, is you just buy above the high of the 180 and you use a stop loss and position share sizing based on where you believe prices would not go. I think we've all been, you can confirm what I'm saying, but I believe most of us, if not all of us, have had that thought of, I am going to maximize my entry point by zeroing in on a smaller time frame because of the signal on the higher time frame. And we don't get the signal on the lower time frame, and we get left behind watching. Right? So there's a give and take. You know, as you try and attempt to get closer to perfection of multiple time frames, the more difficult it will become to obtain that perfection. So there's a give and take there. But if you have optimized indicators based on AI, maybe you could do it. I was joking with Dan a little while ago. I was telling him, I saw an ad on Facebook, and, like I mark off, whether it's intraday, daily charts, my areas of support with these green areas and red areas for resistance. There's nothing here. I see this ad on Facebook, and it's got the green areas and it's got the red areas, and they're promoting their AI system that is like, you buy at the green and you sell at the red and you make money. And I was like, wow. Well, we've seen red light, green light systems in the past, and we've seen them go away too. Dan doesn't understand joke. Dan is the master of jokes. But when you come into the green room, after a little while, you have to grow into Dan's jokes to understand them. It's kind of like a stress test to, can you get it or not? It's all in fun. We have fun here. All right. YM futures, underperform, pulling back here, a little buy setup, little narrow day here. So they are not performing, as well. But we did cover the fact that the industrials did make new all-time highs. I gave some thoughts as to what I think that's about. Transports took a dive the other day. They stabilized on the support area yesterday. Kind of a bearish overtones to this gleeful market, that is moving up on semiconductors and AI thoughts and so on. Semiconductors are obviously having gapped up, and look at the size of this gap up. I think that's a bit excessive. Just leaves a big void. You can see my cursor on the daily chart as to where it's gapping up to. So I am a little concerned that sellers don't just start hitting the bid here at the open. It's been going up for a few weeks after this reversal. So, keep that in mind. Financials been underperforming. They're not doing anything here. That's another little bearish overtones. If this closes red, This could be a little breakout area. Yeah, I'm getting to it. I know you want to get into the green room, Don. All right. You want to capture those charts. So here's another correction bar that formed yesterday, came up off of the low. Correction bars. We talked about the cross there, 20 getting above the 50, joking yesterday about the golden cross there. Prices are gapping up there to 534 and change. They backed off a little bit. So not as excessive a gap, but gapping above the consolidation. So if prices pull back, what you want to look for is what was resistance should become support. All right, so it's gapping up here. If it pulls back into that area, there should be buyers, and we'll see if it goes higher or not. Now, SPX, I think the call side should be the no-brainer. Let me go back here for a second. And it's getting a little late. All right, so we got nothing to the left, so I really don't have that much to compare. So I'm just kind of eyeballing how much above this little base there. And one of the things I noticed this morning was how far this top number moved up, whereas the bottom number only moved up about 10 handles. I thought it should have come up more. So call buying, is it excessive? I think so. I mean, 90, getting close to 5,400, maybe it tags that. If things keep going, it's only gapping up around here based on where the spiders are. So to get up there today, this morning, I think that's a stretch. But if it continues to move higher and we can get strikes near closer to 5,400, or if it really rallies above that, it'll be a no-brainer. The downside should also be a no-brainer. While it's closer, I mean, unless some news comes out that rattles the market in some, shocking way, in no way should prices come down here today, especially as, we go into this holiday. And it's got all of this support down here, so that's a good thing. But can it rally up there today? Maybe, but the size of that gap on the NASDAQ, I think would suggest that we're going to see some selling. Got to be some profit taking, I would think, but we'll see how it goes. Bitcoin, and we talked about this bottoming pattern. We had a great trade, a couple of resistance. We took our money. Ethereum, we took our money in the ETF letter. Just because there's that resistance and excessive moves, it's coming down here. Consolidation at this point, and maybe it goes up higher in the coming weeks. Gold down some more. It should pulling back now that it formed this pattern. It should form a buy setup here in the coming days. Silver outperformed. Free is always good. Free lunch is better. 7 days. YouTubers they don't understand me. I'm not sure about the emoji. I'm not sure what you're talking about, Alex, to share with them. It's getting late, so I want to hand it over to Dan. So we're waiting on silver. Oil. What a disappointment about skipping the $7 offer. Well, they should skip the $7 offer. I mean, I posted the 2-for-1 offer, which is a freaking no-brainer. 2 months for the cost of 1 month to be with us, and then you're here. You're not going to want to leave. But, I'll post it again when I'm done here. Oil still seems to be bottoming, but the big disappointment was the oil sectors just throwing in the towel, on a little pullback on oil. So, that's a disappointment. And I explained yesterday in the green room that, look, when you get a bar like this from a pattern like that, it says that the majority were thinking it was going to go up. And they were right to think it was going to go up. And that's why it creates such a shock. Look at that bottoming tail bar, correction bar. new highs, and it fails. Everybody hits the bid. See ya. Yeah. So look, interest rates are flattish, and we're just going to see how far this thing goes today, or the lack thereof, and keep it in mind. All yours, Dan.
Good morning. I really thought today was going to be, what's playing out. I gave two options on the video. I believed it was going to be a mover. I said the chart definitely looked higher. I said I thought they would blow out earnings. But I also said I have no idea where it's going to open because of, the whisper numbers. But, now we know the answer. Um, Big old gap up. Now, this is not a good call spread candidate, despite the big gap, because it's from a very bullish resting period to all-time highs. I mean, that's a buy on a controlled pullback. So this is driving the whole sector. And I looked at just a couple here, and they all look like great put spread candidates. If there's any juice, look at AMD gap breakout, MU, that's all-time highs. That's a put spread under 126 for next week. Yeah, IBM, we're in. I sent this alert out pre-market to just to raise the stop is all. But yeah, we only have a third left, and I said it's going to move with IBM. So yeah, so let's look at semis. I'm sure a lot of them are going to be extended. But look, that was a closing all-time high yesterday. And now this is even stronger than NVIDIA, believe it or not. Because this consolidation is at all-time highs and far from the 20. But yeah, I'm surely not suggesting, I'm bullish again here because we're getting a turn up. I'm saying we might continue to go up for another day or two or three. I don't know, but as Greg explained, that just feeds into our scenario of getting those internals more cooked. All right, so that's NVIDIA. Here's some of their earnings with VFC. It's a bearish gap. That's a nasty downtrend, daily, weekly, monthly. It could be 30-minute low idea. Now this, I didn't do any earnings trades with options, but we were contemplating selling the 150s or lower on this. This is a big old inverse head and shoulder bottoming pattern. And I clearly explained in the green room that the pattern like this, the risk is to the upside. So, because somebody was asking about a condor, and depending what strike and all, that would have worked also. But I was only interested in a bullish trade. So let's watch this. I have it in the middle window here. Let's watch that for a put spread and a directional. That looks great because that's an igniting gap. ELF 165. There's no pattern, no void, but it looks like this could be the start of a downside shakeout. So you know what? Even though it's sloppy, yesterday we did MT live on selling put spreads. Even though I have zero interest in trading this 30-minute high, I would consider a put spread for tomorrow. So I'll keep that on the list. So that's the good thing about Thursday here. Thursday earnings is we can do a 1-day put spread. All right, BMA. This is an M top. And it looks like it's opening flat. Let's set an alarm at 60.30. Oh, shoot, it's under. Ah, I did have an alarm, and this one tick right here set off my alarm. I was hoping it was opening like where this little green bar is, because then it would be a continuation short and the call spread. Uh, ramp, $6, 38. All right, so gap's too big. But you all know I like telling you what would make it a tier one gapper just for education. And if it were gapping right over the week's high or just a little bit more, let's call it 34.50, 30, just low 34s, then that would be a tier one igniting gap from a bottoming pattern with a void. But now, gap ruined it. Plus, it's big old mess. It shows it down $2, but no volume. This another, nah, it's a sloppier M top, but I don't see any pattern. MDT down. There's a call spread idea. Gap there's a bearish gap. I got NVIDIA other computers. Let's put MDT there. That's a great call spread. This I would have shorted just as a regular sell setup. Look at the declining 20, 50, 200. You know, but it's earnings. So now it's where it's 57. Well, it's a neutral right now. Is it now going to trade back under yesterday's low? Or is it going to be the start of a red bar ignored trading range? I don't know. So let's watch them. NT's, you know, kind of a sloppy-ish Bear Island reversal. Call spread idea. Beaky, I posted call spread idea if we can do the 19s. I posted that in Telegram. RL, nice. It's, you know, down, up, down a little. So this I like a lot. I have snow on the other computer. Let me put RL here. That looks very nice. Bravo, Julia. That thing trades wacky. Goes it down 22 cents. It's strong, but I don't like the way it trades. Same with this, overlapping bars, but strong. I just don't like overlapping bars like this. And then it just makes it's harder to trade. You got to trade more of the moving averages and major pivots. Billy, $15, call spread candidate and day trade short idea. Dava, $31. Bullish gap could be the start. Could be the start of the bottoming pattern. Boar is a bullish gap, but it's kind of to target. It's a big gap, so no interest. Shoot, Carnival, foot spread idea. So my option traders, if you can keep an eye on these a couple of tier ones I've thrown out. So there's two ways we can play this: a controlled pullback, reversal, and minor support, or 5-minute high. We would sell a put spread under yesterday's low. Got it? Makes sense? That's the approach. Greg Breeze alarm, bottoming pattern, but nothing to do right now, but keep it on the list. Papa Romeo, we're trail stopping out. Go ahead and take it. That's been a nice short. So just take it. DD is splitting up. And here, Greg, tell me how I did on this. The high pre-market high is 83.50, and that's where I told him to sell half. High tick.
I'm going to make a question to put in to subscribers if they know how to use their platform to sell pre-market. I mean, there's so many different platforms. It's just, and I'm interested as far as the level of sophistication that our subscribers know. I'm sure there are some that have no idea. Depending on your platform, a little different. Alex, you're shorting NVIDIA? The monster. You might have thought of buying a put.
Yeah, they'd be ridiculously spready at the open. Wow, snow 100% retracement. And I'm keeping a tighter leash on COP just because it actually showed a gapping up. $2. My up alarm went off this morning and went against us after entering. So I'm just managing him a little tight. I excessive gaps. Yeah, I mean, if there's a pattern, I would do it too. I would not short that yet myself. There's no recognizable pattern yet, but I'm a little more cautious. No, I mean, I'm with you mentally about fading big gaps, but I still obviously have to go through my approach on timing of them. Snow is getting killed. Man, look at Snow. Gave up. That was a beautiful bullish gap, 30-minute high, or if it came in controlled. So that's an example of what we call the bullish gap that buries. It's just the opposite, of a bearish gap that's negated in the first 30 minutes. And 37. All right, so I got zero interest in that. MDT I liked, call spread, but it fell too much into the open, so I'm not going to even look. GME, I had an early alarm. Our stop is under 20 for the put spread, expires tomorrow, so we got a beautiful open profit. Anyway, let me see what the midpoint is, 16 and a half. This is the melting ice cube we talked about. It's now 6 cents, and I try to get out at 4. I had gotten out at 4 earlier, but I won't record it that way. So GME new stuff is under 20. Still in trail mode ASO. Look at that weak dog. This has been a very easy one to manage. Alex, just like that Orly or whatever that we talked about yesterday. Wait, Papa Romeo. I said, oh yeah, 1592. Yeah, so we're at a Papa Romeo. So it was a real alarm stop. Papa Romeo. Did we meet our third target yesterday? No, we didn't meet the third one. So we're at 1574. Papa Romeo. EEHC. That was a short we did into the close. Nice. Let me set new alarms. Man, diamonds. IWM filled the gap. Diamonds took out yesterday's low. These are very different markets here. FFIV alarm is triggering. Short. So yeah, our internals, you don't see me looking for longs here. A lot of euphoria. Cop is in free fall. A lot of things selling off ugly. So I think Greg mentioned that. Don't be surprised if people hit the bid at the open. I surely would be. There's a GE. That looks great. FIS, FI, FFIV, I mean. All right, so that.
Just thinking, Dan, beyond just the technicals, excessive gap should be selling, but yesterday's sell-off based on the FOMC minutes, like you have two influences. And so FOMC was a disappointment on news. It's like, okay, now are we not going to get the cut in September? Will it be in October? Creates that uncertainty, market sells off. Then we get this bullish gap in NVIDIA. And which one, NVIDIA isn't the market, but it influences other things. And it's like, so things gap up, but then here's the yesterday's news, which has bigger implications as far as potential disappointments. And so now we just see how this thing unfolds as to, the trend. Does it give it up? It just would make sense that they'd be selling at the open because of the size of the gap, profit taking after the run. And we'll just see what happens here. It's not to be all out bearish yet.
Oh, of course. Still up, friends.
But the Dow looks like it's going to go lower. That's coming down to some support here. So we'll see if that holds. But if you look at the Dow, and so where things were, it underperformed. It opened up on the 5-minute chart right at yesterday's pivot high, and it sold off. So, that particular index was nothing changed from, that gap up. It's like it was in a bearish move on a 5-minute. It opened up near resistance, like as if there was nothing happened overnight, and sellers hit the bid. And now it's moving down, and we'll see whether it holds at this next support or not. Whereas you've got, the Qs got a big void down to what was yesterday's resistance. That has the potential to move down. And we've got now the S&Ps on top of the minor support there. They haven't filled the gap, but if they don't hold here, that suggests that they're going to go down to fill the gap. And so it's a little bit of a tricky situation based on, different markets. And I see NVIDIA is still above its open. So those buyers aren't throwing in the towel. SMH is still hanging up there. And, personally, I'm just giving it a little time to see what unfolds here. Russell is on support. I think, without Nvidia selling off, Apple's got a little breakout bar failure on the daily. We'll see how far that goes. But the Qs have the biggest potential to move lower here. That continues. You know what's surprising? With this gap up this morning, I mean, things were selling off, after I was, talking, came in a little bit, but, most times, and this is kind of confirmation of a decent day, that the ticks weren't opening up above 1,000.
But wait, I think I know what you're saying. But say it again, it's confirmation of what?
Confirmation of the strength of the gap up. Things were coming down pre-market before the open as to where, when I was started talking, they were up there to the high of the day, and then they started to sell off, I guess, on that economic news. But on a gap up like this today, semiconductor gapping up, I mean, financials, tech gapped up, SMH gapped up, some things didn't. But on a gap up day, especially with Nvidia gapping up to the extent it did, most of the time the ticks would have opened up at a plus 1,200, 1,500, and they pretty much opened flat. The ticks opened flat. DXX showing a little relative strength. Yesterday was a wide range bar. So these transports may start to outperform. SPY-G is growth, so that's, tech. XLK is near the low of the day. That might go down to fill the gap. It's got that minor support around 215.80, 216.
It's Ralph Lauren. All right, no trade there anymore. I was hoping it would stay weak. Yeah, I just looked at it. It's fine, that's fine. Particularly if we get a, turn in the market here. It's a descending triangle breakdown, sure.
Yeah, and here, this would be I'll capture this because I don't think your platform, well, you'd have it on TC 2000, but the 1050 calls for NVIDIA expiring tomorrow.
Mm-hmm.
Yes, at yesterday's close, they were about $1.50.
Mm-hmm.
NVIDIA gaps up to where it is and goes higher. They're
Mm-hmm.
trading at 23 cents. So there's your example of volatility crush.
Absolutely right. And right, volatility crush dwarfing the delta that went against you.
Mhm.
23 cents. I'd rather buy those calls as a lottery ticket.
Expiring tomorrow.
Why not? That's only $13 away. Are you kidding me?
Yeah.
I'm
maybe.
looking right now myself. No, you're looking at something wrong, Greg. It's 1010. The
I'm
1050.
looking at the 1150.
Ah, I thought, my bad. I thought you meant 1050. Okay, okay.
Yeah, was thinking 1050, but I clicked the 1150. I went, let's see what the 1050s are.
Right now, that's why I was salivating. I mean, $13 away for 23 cents. Are you kidding
Yeah,
me?
yeah, yeah, yeah. But
So
initially they did go down and then flipped back up again. I
yeah.
was I was thinking if there was some premium far enough away, we could do a call spread expiring tomorrow.
The problem is you can't get a good credit when everything's inflated. Breeze, I reset the alarm. Mark alarm went off for some reason, but I don't know why. I'm square. I move the stop over this thing. Amerex finally stopping out. And I think that was another one. I was thinking of killing break even. Order. Yeah, I like it. Looks good. All right, I will.
Microsoft filling the gap, Google coming down, Meta filling the gap here. Nvidia's got to throw in the towel. Apple.
That's yesterday's high. Yep.
Where going down? Again.
Square there.
COF, Dan.
Yeah, I got to set a half. Let me tighten the stop. Wow, there's nowhere to move the stop yet. Let me put it here on the 5-minute chart. I'll just keep a tight leash on it and close it into weakness. Wow, Sam, I don't know if you're here, but remember this Eric you mentioned over here? Nice performer. We close half a cup. I'm gonna keep a tight leash here and we will close it into weakness here. Approaching this. Wow, I just had 3 alarms go off in 5 seconds. That tells you something about the market moving up or down. Oh, I had AMC. Why did my AMC alarm? I had an alarm at $5. That's why. Still nothing to do, but let me set a new alarm. 5:05. But still don't think I'm interested in buying if the market's in full pullback mode. FSIV low alarm.
Fighters gap fill.
Toss low alarm, but we got a big stop. Sienna low alarm. Greg, that's one we did a half lot on. Still, early alarm, but play. Set a new up alarm 4980. GME is stopping out. Just take the money. It's only 1 DTE, but we have a nice profit. VIX moving up. Yeah, our midpoint's 5 cents on GME, so we'll just take it, avoid overnight risk. Cop still grinding lower. GMA, I'll set a new alarm, 2210. Well, Greg talked about the, dichotomy of people's perceptions and reality and so forth. All right. IBM. Where's our stuff? $172.98. Ah. All right, so that stopped out. I didn't reset my alarm this morning. We only had a third left. $73. Made up. Made over $4. This cough. I'm just stair stepping this 5-minute chart. Get tight stuff right here. 137.91. Wow, still doing pretty well. Yeah, I remember yesterday I said I liked it a lot as a bottoming pattern. And I was comparing it to like CVS doggy. Remember we made that comparison? MU, AMD were on my put spread list, but no more. Stay alarm. I'd rather it close like this. I'm just not jumping on the bullish train here. Hey, do you all know why we would call this a minor 1, 2, 3 instead of a regular one?